Weekly report. Macro impacting the U.S. stock market plus earnings by sector, August 25, 2025, August 29, 2025, prepared August 31, 2025, version 1.0, in the structure of the weekly report TXT template, cooling off slightly from record near highs, July PCE inflation exactly in line with expectations, Q2 GDP revised upward, while the AI chain is mixed. Nvidia with strong numbers but cautious sentiment, Marvell with a disappointing outlook. China is contracting for the 5th month, and risk-taking is becoming more selective via the U.S. channel. 2. Global events, U.S. impact, China automatic, 2.1 inflation monetary picture plus market sentiment, July PCE price index, 0.2% core 0.3%, YY 2.6% and 2.9%. Overall, this is consistent with slow disinflation, and keeps the odds of a September Fed cut alive. Risk. Political uncertainty has emerged around monetary policy, the Lisa Cook issue, which could disrupt decision-making consensus. This is interpretation, not a statement of fact. BA. WSJ. 2.2 consumer macro channel July durable goods orders overall minus 2.8% but ex-transportation plus 1.1%. The headline is weak, aircraft. The core order book rather points to stabilization. This is interpretation. The corporate investment cycle has not stopped, only diverges by sector. U.S. Census. 2.3 impact of specific actions on index breadth. There was also news on the legal front this week. A federal appeals court found several Trump tariffs unlawful. If this persists, it could benefit industrial value baskets via the cost channel interpretation. WSJ Live. 2.4 China automatic block. The official Chinese PMI for August is 49.4, 5th contracting month, while the 90-day U.S.-China truce was extended. U.S. channel, ADR sentiment, supplier exposure, and the sensitivity of the AI investment chain riders EAP. 3. U.S. equity reactions, weekly view. The major indices weakened slightly on the week, S&P 500-0.1%, NASDAQ-0.2%, Dow minus 0.2%, but the S&P closed August at roughly plus 1.9%, the 4th consecutive winning month. After Thursday's records on Friday's PCE day, technology dragged down the broad market. AP, WSJ Live, Yahoo Finance. 4. Weekly earnings, in detail, told by sector, narrative technology, AI ecosystem, Nvidia, NVDA. Nvidia's Q2 FY26 revenue $46.7 billion, plus 56% YY, Blackwell Data Center plus 17% QQ. They announced a $60 billion repurchase authorization. There were no H20 sales to China, partly export restrictions. The numbers are strong, but positioning is high, so the stock fell after the report. Interpretation. Very good is no longer enough for a surprise. IR, WSJ. Semiconductors, custom chips, Marvell, MRVL. Marvell Q2 FY26 revenue $2.006 billion, plus 58% YY. But the outlook in key markets is more restrained. The stock fell hard. U.S. impact. The AI ASIC race, hyperscale customers, produces selective winners in the supply chain. This has a cooling effect on breadth. IRPRN, Barron's, infrastructure, storage, pure storage, PSTG. Q2 FY26, plus 13% YY revenue growth, raised full-year guidance. U.S. channel, in AI data center investments, the storage layer remains a bottleneck, which also affects CAPEX across several industries via the supply chain. IRPRN, cybersecurity, identity, Okta. The company raised its full-year revenue and EPS outlook, supported by large public sector deals. U.S. channel, the defensive element of zero trust/identity spend supports the software basket even in a high-rate environment. Reuters, IR, data platform, MongoDB, MDB. The Q2 FY26 report beat, the stock reacted with a 30% plus jump due to better revenue, EPS, and strong Atlas pull. U.S. channel, AI data workloads in the cloud accelerate consumption. IR News, Economic Times, Yahoo. Retail, Dollar General, DG. Raised full-year guidance, Q2 SSS plus 2.8%, EPS above expectations. Higher income customers are also shifting into the value segment. U.S. channel, the shift in consumer mix supports defensive retail. Writers, Yahoo Finance. Electronics retail, Best Buy, BBY, Q2 FY26, comp plus 1.6%, ADG, EPS $1.28, full-year outlook reaffirmed. U.S. channel, cyclic pickup in durables, electronics, is consistent with the core order book. Best Buy, IR Corp, fashion retail, Urban Outfitters, URBN. Record Q2 revenue earnings, yet falling share price due to margin outlook and tariff risks. Positioning and guidance sensitivity. Globe Newswire, IR, Market Watch. 5. Narrative close plus viewer question. The week's message, record near normalization. The macro, PCE GDP revision, supports U.S. equities, but in the AI chain the market is already picking. Alongside the big winners, fundamental screening, guidance, contract quality is coming in. In retail, the value channel wins, while premium growth remains selectively. Your question to the viewers: if the Fed cuts in September, does more alpha come from the quality value basket, financial/industrial/defensive retail, or from second-tier AI growth, data storage, custom silicon, BA, APE? Speaking frankly, I expected a larger, potentially double-digit swing in NVDA in either direction, and could imagine a sharper reaction both up and down. That ultimately didn't happen. Even so, I still have confidence in NVDA and the other major chip makers. I see meaningful potential in the sector, so I haven't changed my portfolio. I'm aware that the most recent trading day was particularly weak for semiconductor stocks, but my strategy isn't built around day-to-day noise. I monitor the risks, and as long as the longer-term thesis remains intact, I'm holding my positions. So let's see how the three strategies have evolved. Strategy 1. Lump sum, one-time investment, blue line on the chart. The first investor bought an S&P 500 ETF on January 2, 2025, investing the entire $15,000 at once. They've held the position ever since, no additions, no withdrawals. Current performance year-to-date, 84%. The blue line reflects this result, based on the most recent Friday closing price. Strategy 2. Dollar cost averaging, gradual investment, green line on the chart. The second investor splits the $15,000 into 12 equal parts, investing $1,250 on the second trading day of each month into the same S&P 500 ETF. This approach helps smooth out volatility and reduces the risk of poor entry timing. Current performance year-to-date, 53%. The green line reflects this strategy, slightly outperforming the lump sum method so far. Strategy 3. My fictional portfolio, red line on the chart. This portfolio is based on my own stock picks and investment decisions. It launched on March 19, 2025, with the full $15,000 invested in various individual stocks over multiple transactions. I've explained my choices in earlier videos. Current performance year-to-date, 73%. Note, these performance metrics exclude broker fees and taxes. They reflect only market-based price movements. Thank you for joining us on this economic journey with Test Portfolio XSX. If you enjoyed this weekly recap of the key events and our portfolio's performance, give it a like, subscribe, and join us again next week as we review the latest market moves and the progress of our investments. Disclaimer: this video does not constitute financial advice and does not recommend the purchase or sale of any financial instruments. I do not take responsibility for any potential inaccuracies or errors that may occur.